It has been quite a month since my last real estate market update, to say the least. Now, if you've been watching the news lately, you've probably seen some pretty scary headlines. Warnings of another housing crash, and a looming recession, and mortgage delinquencies hit 20-year highs. I mean, it's enough to make anyone feel uneasy. But here's the thing. These headlines often do more to terrify than clarify. So in this month's real estate market update, I'm going to walk you through exactly what's happening in the housing market, both nationally and right here in Frisco. I'm going to take a look at the facts, the inventory levels, the expert forecasts, what mortgage rate trends are, and what history tells us about recessions on home prices. So whether you're wondering whether now is a good time to buy or sell, or if it's better to wait, stick around, because by the end of this video, you're going to have all of the context you need to make an informed decision and not just react to the headlines. Hi, this is Andrew with the Andrew Smith team, eXp Realty here in Frisco, Texas. And, for potential buyers and sellers that I've been talking to, especially in the last month, one of the most consistent themes has been, we don't know who to believe. We don't know what the news is saying. We don't know about this article that we read. One person says this, another person says this. We're just confused. And I understand it completely. It's confusing to me at times, even though I've been doing this for a very long time. So you really kind of need to wade through what's been said and what is actually going on. And I'm going to do that with you here today. We're going to start out by looking at some slides, and then I'll dive into exactly what's going on in the Frisco market before we wrap up with a little bit of information particular to you if you're considering buying or selling this year. So let me share my screen and we'll get going. Now we're going to start off with some of those sensational headlines that I've been talking about. Wells Fargo warns and talks about the Great Recession right up over here. And then you've got homeowners comes next is hell. They are just incredible and sensational. But the one I featured right here, Patrick Bet David, he put this out. He said 6.1 million Americans are behind on their mortgage, the highest in over 20 years. Brace for impact. And then he's got this chart right here. The reason I bring this up is, and I can't expand this anymore, but if you were to zoom in on right here, what this is looking at, this is multifamily. This has nothing to do with townhomes, condominiums, or single-family homes. This has nothing to do with the average American homeowner. This is talking specifically on portfolios of multifamily properties. So again, we really have to be careful, because the truth of the matter is, again, these headlines do more to terrify than they do to clarify. The truth of the matter is, if we actually look at single-family homes, Americans are sitting on more equity right now than they ever had in the history of real estate. 40% of homes in this country are owned free and clear. I'm going to get this percentage wrong and I don't have it written down right in front of me, but it's like another 27% have more than 50% equity in their home. So you've got 67, 68% of the homes with somewhere between 50 and 100% equity. This is not like it was before, because that equity position didn't exist. So the idea that you're going to see a wave of foreclosures in single family homes is just not there. Will there be some? Yeah, there'll be some, but they're there in every market. Good, bad. Even when our market was flying, a couple of years ago, 3 years ago, and there were multiple offers and everything going on, were there foreclosures? Yeah, there were. Those happen all the time. But a headline like that or a post like that was actually from Facebook, again, they do more to just terrify people. And it's a sensational snippet. Most people consume things in just minute little headlines. That's it. They don't read all of the information out there. But I know that people genuinely have some concern, especially about the economy. And we've seen that, the wild swings of the stock market recently, and there's definitely some reason to be concerned. Even a lot of the analysts that I follow pretty close, they've raised the likelihood of a recession, but is that necessarily a bad thing for the housing market? Well, let me show you. So one of the people that I usually follow pretty closely is Mark Zandi, and he's the chief economist at Moody's Analytics. And he says here, the risks of a U.S. recession starting in the coming year are uncomfortably high and rising. I would put them up at 35%, or I would put them at 35%, up from 15% at the start of the year. And I get it. And even you've got here, Lori Goodman, a fellow at the Urban Institute, she said, with regards to home prices and recessions, a lot of people have this idea that home prices fall during recessionary periods. And there's really not much of a connection between home prices and recessionary periods. Of course, during the great financial crisis, which was 2007, 2008, 2009, during that time frame, this concept in people's minds that if the country goes into a recession, but let's just assume that it does, is that bad for home prices? I mean, if you've got a job and it's a solid job and it's, not going anywhere, what home price is going to do? Well, here's what's happened in the past. So these are the home price change in the last 6 recessions. So you can see in 1980, home prices during the recession went up 6.1%. In 81, they went up 3.5%. In 91, they went down just under 2%. 2001, they went up 6.6%. So the exception is 2008, when they fell nearly 20%. And I get it. I get why that is a concern, because let's face it, there's a lot of people where that's the last housing downturn that they remember. It's the last one that they have knowledge of. And with that being the one that happened last, people are like, well, it's going to happen again. But let's be honest with each other here. Haven't we been hearing this for the last 5 years? I mean, when COVID hit, what was going to happen? Oh my gosh, the market's going to crash. The market's going to crash. That's all the headlines were. And it didn't. It didn't crash. As a matter of fact, in 2020, you can see there the last year that they looked at, home prices went up 6% in 2020 on average. And we know what they did right thereafter. That's where we went on this historic run of home prices where we had the multiple offers. We had all kinds of different things happening. So the idea that when there's economic uncertainty or recessionary times that home prices collapse is just not true. Now, here's where the experts are saying that home prices are going to go this year. This forecast was just updated on April 1st. So it's very, very recent. And has home price appreciation slowed? It has. I'm going to show you, especially as we get into the Frisco data, what's happened. We've seen home prices stay relatively flat here in Frisco, but we definitely haven't seen any declines. If we look at the Dallas Metroplex in all, I think year over year, home prices are down right around 1%, but we're not seeing that right here in Frisco. So that's, again, just an example of how it's all local. I mean, it can vary from neighborhood to neighborhood, from city to city, community to community. And that's why it's really important to understand your local data. And I'm going to tell you exactly how to keep an eye on your local market and your local data in just a little while. So as far as these home price forecasts go, you've got Morgan Stanley estimating that they'll go down 2% this year. Moody's Analytics are all the other one over here at 0.4%. Everyone else is in the positive. They're all in the green. And if we average all of this together, you've got the average of all 23 forecasts are 2.7% home price appreciation in 2025. Now, obviously, there's a lot going on. We're going to wait and see exactly how this plays out. But the idea that prices are just going to come tumbling, I don't see that at all. Are there more deals now? Yeah, there are. Are there price cuts that have taken place? Yeah, there are. But I'm going to get into that later on what's going on exactly there. On the flip side, recessions are really good for mortgage rates. So this is what mortgage rates have done during those past 6 recessions. In 1980, they fell 4.25%, 5% in 81. They were down 2.25% in 1991. They were down just over 0.5% in 2001. They were down 1.13% in 2008 and 1% in 2020. Mortgage rates have been on people's minds a lot. They actually dove quite a bit last week as the stock market went down, money flooded to bonds, and money poured into bonds. It changed the yield, which impacted mortgage rates. And that's about as deep economically as I'm going to go in this update. But we've seen some volatility, but overall, we are generally seeing a downward trend in mortgage rates, which is great for anyone considering buying. Now, the other thing that we heard you may have heard, is that new home inventory is at its highest level since 2008. And the way the headline reads, it's though we've got this glut of new home inventory all over the place and that we're setting ourselves up for some big fall again. And that's also not the case. So take a look at this. So the number of new homes on the market reaches the highest level since 2009. Okay, and that is 100% true. It's completely accurate. But let's look at that. 2009 is right in here. This is where we are today, right here. So have we had the highest level since 2009? Yep. Are we anywhere near where we were in 2007, 2008? Nope. And I want you to notice, rather than looking at that, let's focus on this. Let's look at this period here from 2008 to 2009 or 2025. All of it below that trend line. Why is that important? Well, inventory is just catching up to where it should be. We have been drastically underbuilt for more than a decade. So when COVID hit and we had all of those lockdowns and then we saw prices soaring, why were prices soaring? Supply and demand. It's simple supply and demand. Mortgage rates plummeted. Demand went through the roof, but there wasn't any supply. So it forced prices up. The builders have been playing catch up. Now, here in Frisco, Prosper, Salina, it's a little bit different. We've got a ton of new construction taking place, and the builders are reporting slower sales, but they're still building. New communities are still opening up, and the new communities in the most desirable areas are still selling for the most part. So the idea that we've got some unhealthy balance of inventory is just not true. And if I switch from the new home inventory market, let's look at the resale for just a second to put some perspective into this. So what we're looking at right here is all listings. I always get this question, Andrew, that chart you showed in your video and your monthly or your weekly market report that I subscribe to, they're not the same thing as far as the total number of active homes for sale. And that's because this one here by Realtor.com is looking at all property, single family, townhomes, condos. The weekly report I put out doesn't lump them all together. It mainly is just showing single family, and you can look at condos separately. So just for some clarity. And now if you'd like to get that weekly market report yourself, I'm going to tell you how to do that in just a few minutes here. So 2020 is the red line. I know it might not be as easy to see, but 2020 is the red line, okay? Everything above the red line is pre-COVID. Everything below the red line was post-COVID years. So you look here, we've got 2021, 22, 23, 24, all of that down here. And this is 17, 18, and 19 up here. This yellow line is 2025, and it's where 2025 is trending. Is there more inventory? Yep, there's more inventory. Just like with new construction, there's more inventory. Is it historically high? Well, no. We're still below where we were nationally with regards to all of the inventory showing in 17, 18, and 19. And that's the same here in Frisco. We've gotten closer to the trend lines where we were before COVID, but we're still not past them. There's still not an absolute glut of homes. I will tell you, this, when it's forecast out, when this is put into the algorithm, they forecast where this is going to go. It starts to flatten out. We do cross that red line, and then it ends up somewhere right in here. So it's going to be higher than it was in 24, higher than it was in 20, but still not quite back to the level where it was pre-COVID, although we're getting much closer. Now, I realize this is a lot of data to go through, and I know some of you viewing this are going to absolutely love it, and some are going to say, get to the point already. I get it. I mean, the only way for me to have a solid knowledge of the market is to do this research on your behalf. And I do it honestly so you don't have to. So if you've got questions or a specific situation that you would like to talk through in more detail, then I invite you to reach out. You can go ahead and call or text the number that is up on your screen, or alternatively, if you want to go ahead and scan this QR code right here, it's going to take you directly to my calendar. And I always offer a free 30-minute consultation. You can book a call with me at a time that works for you. We can talk on the phone or via Zoom, and I'd be more than happy to go through everything with you and provide some additional information so that you can make the best decision for you and your family. I'm going to turn my attention now to the local Frisco market. And again, even if you're not in Frisco, I encourage you to stick with me and watch this through, because I'm going to show you how to get the exact same information for the city or zip code you are most interested in, and what information to actually look at and interpret so that you can see what's going on in your own market. Then I'll wrap up by telling you what all of this potentially means if you're planning on buying or selling a home this year. So let's take a look at that local Frisco data. All right, so what we're looking at here is my weekly Frisco market report. And again, right at the top of this report, if Frisco is not the city you are interested in, right here you can put any city or zip code in the entire country into this search bar, and you will be able to see this exact same data. And again, this is how I mentioned, it's split between, right here, it's split between houses and condos. So that's why it's a little bit different on my numbers compared to what was showing nationally. So first up right here, the market action index. This is a gauge, and it shows the relationship between supply and demand. 30 is considered a balanced market that doesn't favor buyers or sellers. And the closer this number gets to 100, which is where we were in 2021, the more the market conditions favors sellers. Red hot market, multiple offers, things like that. Right now, we're at a 36. Last month, we were at a 37. So you can see it's bouncing right around. It's slightly in favor of sellers, but not drastically. Now, as I scroll down here, what we're looking at here is the median list price. And you can see a couple things I just want to point out here. This is where we are currently, right? So the prices in here are moving, but they are not trending upwards rapidly. So remember, just a few minutes ago, I was saying the home price expectations for this year, all of the analysts had brought their forecast down, and we're seeing that. So if you look, if I go back here, so look, this is 2023. You can see how prices ran up rapidly. This is when we go into the spring of 24. Look at this, how sharp prices were going up. Look where we are in 25. It's a much flatter line, which tells you, again, it's not declining, but the prices are not soaring like they were in the past. Now, from there, let's go and take a look at inventory. So again, this is inventory here in Frisco. So this goes back into 2020, and you can see, do we have more than 2020? We do. This is right as we were coming out of the COVID time frame, and we went on that massive declining inventory, and then it's picked up, gone down. So you can see here, we've seen a huge jump in inventory in the last couple of weeks. I know a lot more sellers have suddenly come to market than what we've seen in past years. But prior to COVID, it was really reasonable to see 800, 900, 1,000 homes for sale at this time of the year. And right now, we are not seeing that at all. You can see here we're at 592. We're at 639. So definitely not the same thing overall compared to prior years. But inventory is improving, which is good news for anyone considering buying. Now, the lastly I'm going to look at is we're going to look at properties with a price decrease. Why? Well, if you've seen any of these reports before, you know this is a stat that I really like, and it's one that I watch fairly closely. Now, if you're a seller and you put your home on the market and you have not gotten a lot of activity and you haven't gotten offers in a reasonable period of time, and that period of time is getting longer these days as days on market is increasing, then you're going to be forced into reducing the list price. So you're going to reduce the price. You can see here that the number of sellers reducing list price continues to fall. So the number of sellers having to take a price cut before going under contract is declining. Now, if we go back just a second, the inventory that we had was rising. So even though there's more homes for sale, the number of sellers having to reduce price is declining. That shows buyer strength in the market and kind of gives you an idea on activity in the months ahead. So again, right now here in Frisco, things are moving right along, but that's not to say that there aren't some great deals out there. And I'll explain exactly what all of this means if you're planning on buying or selling a home right now. So for buyers, the good news is that more inventory means more choices, and in many cases, more negotiating power. We're not in any sort of a frenzy like we saw back in 2021. If you look specifically at new construction, many builders have been and are continuing to offer some significant price deductions on inventory homes and some significant incentives on to-be-built homes. They're offering more money for design center, and they're also attacking it from a financing perspective. Talking of financing, if rates do continue trending down and they fall later this year, as many are expecting, keep in mind that that's going to bring a lot of buyers that have been sitting on the fence back into the market, which means more competition, and it could mean fewer deals. So right now, if you've got the ability to do so, might be a window of opportunity for you to at least consider. Now for sellers, while inventory is up year over year, as I showed you, it's still way below pre-2020 levels. And with home prices projected to rise modestly, not fall, it's still a solid market to sell in. Are you going to get multiple offers and a bidding war right out of the gate? On a couple of properties, to be honest, that's still happening, but for the most part, we're not seeing it. So you shouldn't expect that. It's going to take longer for your home to sell. It's going to sit a little bit longer than what we're used to, but that's no reason to panic. Now, if you're looking to move up into a larger home or downsize while you can take advantage of all your equity, timing and strategy is everything. So for anyone moving up, you've got, especially if it's new construction, there's some amazing incentives we can capture for you. And if you're looking to move down, you can tap into all of the equity that you've built up over the years. So again, whether you're trying to make sense of what's happening or you're just wondering if your plans even make any sense or you should put them on hold with everything that's going on in today's market, then let's talk. Remember, I offer that free 30-minute consultation. We can go over your specific plans, your goals, and take a look at what makes the most sense for you, not based on the headlines, but based on your specific situation. So go ahead and call or text the number that's up on your screen, or feel free to go ahead and click this link to go directly to my calendar and book that 30-minute consultation with me. So again, hopefully today's video, it's a little bit longer than I usually do, but we definitely had a lot to cover. Hopefully it's helped to provide a little bit of clarity for you and make sense of what's going on. And again, don't hesitate to reach out. Make sure you stick around because I know you're going to enjoy this video coming up next.